Hey, and thanks for tuning in. Holly Shields here for kalkinemedia. Impact investing is based on the concept of social responsibility that has the individual and institutional investors at its heart, compared with corporate social responsibility that has businesses at its heart. This investment strategy is undeniably gaining momentum, especially after the COVID-19 pandemic. Electric car maker Tesla's stock is an example of how investors are flocking to the asset classes that generate socio-environmental benefits. The rise of the company's stock helped Elon Musk become the first ever person with over $300 billion in net worth. So are so-called dirty stocks losing their luster? Well, recently CDPQ, Canada's leading pension fund, declared its intention to shed the fund's multiple billion-dollar investments in oil stocks by the end of 2022. And in January this year, two New York City pension funds announced a similar divestment from the fossil fuel industry. In the ongoing 2021 UN Climate Change Conference, world leaders have committed to cutting methane and greenhouse gas emissions to limit rising temperatures. It's just not possible to cut emissions without rethinking investment in the fossil fuel industry. Activists and environmentalists alike are creating pressure on governments and banks to reduce their exposure to dirty fuels. This is where impact investing and choosing green over dirty makes more sense than ever. This is a time when retail investors are on the driving seat of the stock market, given the proliferation of online discount brokerages. Many of these investors are looking at greener and more socially responsible stocks as a social responsibility for a likely appreciation of their portfolio. Impact investment is expected to grow further from here on. The S&P TSX Renewable Energy and Clean Technology Index comprises of stocks operating in green and sustainable technologies. The 3-year return of the index is over 20% and a 1-year return is over 8%. The bottom line is that the impact investing strategy is exercising caution while investing that the money is placed in responsible and positive assets. Choosing electric cars or renewable energy stocks over oil stocks is an example of impact investing. It's all about making a positive impact on our surroundings while also doing our bit in cutting out the negative forces like emissions. Now that you're up to speed, check out some of our other videos to stay up to date and boost your financial IQ. This has been Holly Shields for kalkinemedia.